Hello students, welcome to EPG Pathshala. I am Dr. Pooja Walia Man from SGI Samalkhan. Today we are going to talk on the module Major Service Sectors and Career Opportunities from the paper Services Marketing. After studying this module, you should be able to know the rate of service sector growth in India and the major service sectors in India. Service sector is the soft part of the economy. That is, activities where people offer their knowledge and time to enhance their productivity, performance, potential, and sustainability, which is termed as effective labor. The elementary characteristic of this sector is that they produce services instead of end products. Services, which are also known as intangible goods, include attention, advice, access, experience, and discussion. Services might include the transportation, distribution, and sale of goods from producer to a consumer, such as in pest control or entertainment. The goods may be transformed in the process of providing the service, as happens in the restaurant industry. However, the emphasis is on service provider interacting with people and serving the customer rather than transforming any physical goods. The most important growth in this sector also implicates the transfer of funds from the governmental to the contractual profit, non-profit, and hybrid sectors of the economy. For the last 100 years, there has been a considerable shift from the primary and secondary sectors. For the last 100 years, there has been a considerable shift from the primary and secondary sectors to the tertiary sector in industrialized countries. This shift is called tertiarization. The tertiary sector is now the largest sector of the economy in the Western world and is also the fastest growing sector. The service sector growth in India should now be discussed. The services sector, with around 52% contribution to the GDP as recorded in the financial year 2014-15, has made speedy steps in the past period and a half to emerge as the largest and one of the fastest growing sectors of the economy. The service sector is not only the dominating sector in India's GDP, but has also gained substantial foreign investment flows, contributed significantly to exports, as well as provided large-scale employment. India's service sector covers a wide variety of activities such as trade, hotel and restaurant, transport, storage, communication, financing, insurance, real estate, business services, community, social and personal services, and services associated with construction. In terms of the market size, the service sector contributed $783 billion to the GDP recorded during the financial year 2014-15. Out of overall services sector, the subsector comprising financial services, real estate, and professional services, which contributed US dollar 305.8 billion, which is 20.5% of the total GDP. The third largest subsegment comprised trade, repair services, hotels, and restaurants, which contributed nearly 12.5% to the GDP in that period. Let us now discuss about investments. The Indian services sector has attracted the highest amount of FDI equity inflows in the period between April 2000 to September 2015, which is about 17% of the total foreign inflows. The data was released by the Department of Industrial Policy and Promotion. Some of the developments and major investments by companies in the service sector in the recent past was as follows. The Credit Analysis and Research has signed an MOU with the Japan Credit Rating Agencies Limited to collaborate with each other as strategic business partners. For example, Shuttle, an Indian bus aggregator platform headquartered in Gurgaon, has raised US dollar 20 million in the series. Let's have a look at the major service sectors in India. These are tourism and travel service sector, hotel services, hospitality service sector, insurance, education services, media services, telecommunication services, and financial services. We would be discussing all these sectors in a little more detail one by one. The first is tourism and travel services. This is the largest service industry in India. It provides heritage, cultural, medical, business, and sports tourism. The main task of this sector is to grow and endorse tourism, maintain competitiveness of India as a tourist destination, and improve and expand existing tourism products to ensure employment generation and economic growth. Travel and tourism businesses try to target consumers' needs, helping them sort through all their flight, hotel, and recreational options. In order for the tourism businesses to succeed, they rely on marketing professionals to link potential consumers with their services and operations. Hotel marketing is a part of this. Hotels are a major service industry in India. Their importance is undoubted. A large number of international hotel chains have already entered India, either independently or with an Indian partner. The Indian Tourism Department has also recognized their importance and started categorizing them on the basis of the standard of their facilities. Some basic assumptions regarding hotel marketing are necessary. These are: the hotel customers are referred to as guests, as they receive hospitality by way of accommodation, food and drink, or all, for which they pay. If satisfied, only then they return to the hotel for receiving further by paying for the hospitality. Now, an hotel is immovable in contrast to a manufactured product or service which is mobile and can be taken from the venue of production to the point of consumption. The demand for hotel facilities has a variety which a few manufactured products have. Hotels are not only in competition with other hotels but also with the products and services of other industries catering to discretionary expenditure. These assumptions postulate that the economic viability of a hotel depends largely on three factors. First, the speed with which demand for hotel facilities can be generated. Second, the capacity to ensure and retain customer satisfaction, which will result in repetitive business and expansion of business. And thirdly, a package, tenor of atmosphere, service and quality which together constitute the hotel's standing and image. Let us look at the hospitality service sector. The Indian hospitality industry has appeared as one of the significant industries driving growth of the services sector in India. This industry is very sensitive to the needs and desires of people. The riches of the hospitality industry have always been linked to the prospects of the tourism industry, and it is the foremost demand driver of the industry. The Indian hospitality industry has documented strong growth fueled by robust inflow of foreign tourists as well as increased tourist movement within the country. What are the major characteristics of the Indian hospitality industry? Let us look at each of them one by one. The first is high seasonality. The hotel industry experiences more demand during October till April, followed which the monsoon months entail less demand. Usually, the December and March quarters catch in 60% of the year's turnover for India's hoteliers. However, this trend has been changing over the recent few years. Hotels have stretched various offerings to improve performance, that is, increase occupancy during the peak period. These include targeting the conferencing segment and the training segment by offering lucrative packages during the off-peak season. The second characteristic is labor intensive. Qualitative manpower is crucial in the hospitality industry. This industry offers employment to skilled, semi-skilled, and unskilled labor directly and indirectly. Hotel owners in India tend to overspec their hotels that results into leading to higher manpower requirement. With the entry of branded international hotel chain in the Indian industry across different categories, Indian hotel companies need to become more manpower efficient and reconsider their staffing requirements. Then is the changing consumer dynamics and the ease of finance. The country has acknowledged a change in the consumption pattern. The middle class population with higher disposable income has caused the shift in spending pattern with discretionary purchases forming a substantial part of total consumer spending. Increased affordability and affinity for leisure travel are driving the tourism in India and in turn aiding the growth of the hospitality industry. Emergence of credit culture and the easier availability of personal loans has also driven growth in the travel and tourism and the hospitality industries in the country. Let us now discuss the trends in the industry. The hospitality industry recorded a healthy growth in early 2000, leading to a rise in occupancy rate between period of 2005 and 6 and 2006 and 7. Consequently, the average rates for hotel rooms also increased during the financial year ending 2007. The rise in average rates was also a result of the demand-supply gap for hotel rooms, especially in major metros. Hotels were charging higher rates, at times much higher than that those charged by their counterparts in other parts of the world. Lured by higher returns experienced by the hotel industry, a number of players, domestic as well as international, entered the space. India became one of the most attractive destinations for such investments. While, on the one hand, investments continued to flow into the hotel industry, hit by sharp rises in the rates, corporates started looking for alternate, cost-effective lodging options. This led to emergence of corporate guest houses, especially in major metros, and leased apartments as replacements for hotels. While average room rates rose in 2008, the occupancy rates dropped. Occupancy rates plunged sharply even the next year as demand declined following the global economic slowdown and the terror attacks in Mumbai. As a result, hotel rates declined during 2009 and 10. The hospitality industry reported improvement after this period, with domestic tourist movement in the country being at a high. While average rates remained lower, occupancy rates rose, supported by surge in domestic tourist movement. The industry is expected to report a healthy growth in the years to come, with expected increase in domestic tourist movement and rise in international tourist arrivals. Students, let's talk about the marketing strategies in hospitality services. Marketing strategies in the hospitality industries has changed drastically over the past decade. Few years back, the brand name of the hotel was a major driver. But with the arrival of well-educated and experienced travelers, hotel companies have to change their marketing strategies. In terms of opportunities, in India, the prospects for the hotel industry are very bright. With revival in the global economy, international tourist inflow into the country is expected to rise further. Additionally, hosting of international sports events, trade fairs, and exhibitions in the country has also increased the expectation to improve the inflow of international tourists and the domestic tourist movement within the country. The upcoming industrial parks, manufacturing facilities, and ports across the country provide a good opportunity for budget and mid-market hotels. The increase in room inventories is expected to make the hotel industry more competitive, and hotels would be under pressure to maintain quality and service levels at competitive prices. Competitive prices amongst the branded hotels, along with the addition of more budget and mid-market hotels, would make the hotel industry cost competitive with other destinations. The second is the insurance service sector. The service industry has been late as compared to the manufacturing industry in adopting the marketing concepts. Even within the service industries, insurance has been amongst the last to switch to the marketing concept from its earlier sales orientation. Moreover, with the privatization of insurance business and entry of private agencies, the role of marketing has become all the more important. The term insurance marketing refers to the marketing of insurance services with the motto of customer orientation, which makes possible a fair blending of the customer satisfaction and profit generation. Policy servicing is an important part of marketing activity as repeat sales depend upon the consumer satisfaction, which in turn depends upon good servicing. Pre-sale services in the property insurance marketing consists of proper study and analysis of the insurance needs, then survey of the property proposed to be insured, and the technical advice at the time of construction of a building and erection of machinery, etc. This will minimize fire and other hazards and therefore help reduce the premiums. Post-sale services will include reminder for the renewal, then advise on modification of cover whenever the property at risk undergoes a change, and then preference and settlement of claims, and so on. There are a lot of new channels of distribution in the insurance sector. The various channels which have been introduced and adopted in the Indian market are the intermediary channels like the agents, tied as well as independents, brokers or multi-tied agents, then banks and other financial institutions. Then there are certain direct channels like the company employees, the telephonic sales, the direct mailers, internet, and the various branches of the bank. Let's look at internet as a distribution channel. Internet plays a vital role in providing information. In the current Indian market, the customer is not aware about the inherent value of insurance. He thinks of insurance only in the month of March as a tax saving measure. The security provided by an insurance cover is rarely thought about. In such a scenario, internet is an effective medium for educating the consumers about insurance. It serves as a single window for disseminating product process and procedural information to the consumers. With increase in the number of insurance companies, one can observe greater market segmentation and subsequently product designed for each of them. In such a scenario, internet is an effective channel for pushing product-specific information to a particular market segment. Consumer feedback about a particular product as well as suggestions for different types of covers can also be generated through the internet. Let us look at the education sector. The education sector in India is poised at a crucial stage in its growth. India's demographic advantage of having a large population of youth coupled with low gross enrollment ratios presents a huge opportunity to education sector players. At the same time, the growth of the Indian economy and upward movement of income levels is boosting spend on education, which already accounts for the second highest share of wallet for middle class households. Additionally, the big entrepreneurs and private equity players are investing in education sector because of steady cash flows, recession-proof nature of the sector, and negative working capital requirements. Government support for the sector has also seen a boost, with substantial reforms and increased financial outlays being announced and implemented. These reforms aim at not only strengthening the sector but facilitating planned expansion of the sector. The interplay of all these factors has made education an attractive sector with multiple opportunities, as can be seen by the high growth many players are witnessing and pursuing. The key policy making agencies for higher education are the Ministry of Human Resource Development, which lays down the national policy on education, the Central Advisory Board of Education, which coordinates and cooperates between the union and the states in the field of education, the State Council for Higher Education, which coordinates the roles of government, universities, and apex regulatory agencies in higher education within the state. Though a significant part of the Indian higher education system is regulated, there are certain areas that are not. As a result, the opportunities for the private players can be divided into two segments. Media service sector. Media is the most powerful tool of communication. It gives a real exposure to the mass audience about what is right or wrong. Even though media is linked with spreading fake news like a fire, but on the safe side, it helps a lot to inform us about the realities as well. Different kinds of media is accessible to the people, like magazines, newspapers, internet, and blogs. Mass media can be used for various purposes. They can be used as an advocate, both for business and social concerns. This can include advertising, marketing, propaganda, public relations, and political communication. Secondly, entertainment. Traditionally, through performances of acting, music, and sports, along with light reading. And thirdly, the mass media can be used for public service announcements like Swachh Bharat, to name a few. There are a lot of tools available for the media marketing. The word of mouth publicity, propaganda, brand infiltration, customer engagement, undercover marketing, evangelism marketing, and language. We move ahead to the telecommunication services. Telecommunication is the assisted transmission of signals over a distance for the purpose of communication. In earlier times, this has been involved with the use of smoke signals, drums, flags, etc. In modern times, telecommunication typically involves the use of electronic transmitters such as telephone, television, radio, or computer. There is an regulatory body that manages the functioning of the telecommunication services in India. This is known as the Telecom Regulatory Authority of India, TRAI, established in 1997 through an Act of Parliament and amended in the year 2000. The thrust of consumer protection derives from the preamble to the Act. The Act says, an Act to provide for the establishment of Telecom Regulatory Authority of India and the Telecom Dispute Settlement and Appellate Tribunal to regulate the telecommunication services, adjudicate disputes, dispose of appeals, and to protect the interests of service providers and consumers of telecom sector, to promote and ensure orderly growth of the telecom sector, and for matters connected therewith or incidental thereto. Telecom marketing is about creating a competitive advantage by being the best at understanding, communicating, and delivering and developing existing customer relationships in addition to creating and keeping new customers. The concept of the product life cycle is giving way to customer life cycle, focusing on developing products that anticipate the future needs of existing customers and creating services that extend the existing customer relationship beyond the mere transaction. The customer life cycle will focus on lengthening the lifespan of the customer with the organization rather than the endurance of a particular product. Customers have changing needs as their lifestyles alter. The development and provision of products and services also continuously seek to satisfy such needs. A good telecom marketing strategy will take the business vision and apply it to the customer base. The marketing strategies which may be adopted by the telecommunications sector could be the cross-function interaction, strategic alliance partner, market entering strategies, market positioning, pricing strategies, and promotional mix. And finally, the financial service sector. Students, in this, we will be discussing about banks. Bank marketing. This is a new concept of marketing the services of the bank, which is assigned due weightage for the consumer satisfaction. It's aimed at having a full view of the customer's needs, fulfilling the identified needs in the best possible way by required services, identification of potential customers, and conducting the activities at the branches on the basis of market segmentation. Thus, regarding the bank marketing concept, it is right to mention that it is a managerial process by which services are matched with markets. The matching of services with markets is meant as a formulation of overall marketing strategy which suits the taste, temperament, needs, and requirements of the customers. So students, let's now summarize what we have learned in this module. Service sector plays a vital role in developing economies. The service sector consists of the soft parts of the economy, that is, activities where people offer their knowledge and time to improve productivity, performance, potential, and sustainability, which is termed as effective labor. The service sector is not only the dominant sector in India's GDP, but has also attracted significant foreign investment flows and contributed significantly to exports as well as provided large-scale employment. India's service sector covers a wide variety of activities such as trade, hotel and restaurant, transport, storage and communication, financing, insurance, real estate, business service, community, social and personal services, and the various other services associated with construction and management. Thank you.